Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Apple report for Thursday, February 2nd, 2023. Let's take a look at the charts. Actually, before I do that, if you could click like, I would really appreciate it. It does help us out a great deal. The channel is growing thanks to you, those of you who actually click like each and every time you watch the daily Apple report or the daily Tesla report and subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time we do put these videos out for you to see. And also share, if you would, with friends and colleagues. Get the word out. I appreciate it a great deal. So let's take a look at the big picture and work our way in. We came off of targeted long-term support about a month and a half ago in the low 120s. It had been an objective, actually, since October of last year. We tested it nicely. On the weekly chart, not so much, but on the daily chart, we did. And on the way up, we have 140s, which I'll show you in a moment, that we're presently testing, battling it out in the 140s. But long term, for those of you who invest, well, this isn't a long-term investment. This is what I would call kind of like a 5 to 8 month target, 173.54. The opportunity was presented about 5 weeks ago when we were dipping into that long-term support region in the low 120s. There will be another one if we close today above 145.45. This is what I've been saying now for the last few weeks. This area in the 140s was considered a 1 to 2 month target following a test of the low 120s long-term support. It took about 3 weeks or so to reach this zone. We've been at it for a better part of 2 weeks now. We closed above the 140.45 long-term speed line, which I've demoted meaningfully to just a minor point. And really, in terms of continued accelerated upside movement, that would come with a settlement today above 145.45. And then I think with that 173.31 channel top, which is a 5 to 8 month objective, as I said a moment ago, would likely be realized over the next 3 to 5 months. So if we close above 145.45, if you're a near-term trader, say 1 to 2 weeks out, you could consider buying, 152, 154 out of the money calls that don't expire for at least 3 or 4 weeks. I think it would take 1 to 2 weeks to reach it, but that's the next near-term play if we close above 145.45. If your time horizon, as I say, is 3 to 5 months out, you could buy a June out of the money 170, 175 calls that don't expire until June, as I say. You want to go at least 6 months out on that. You might even go further out than that. It'll be a little pricier to buy those further out, but you're preserving delta on the way up. So bottom line with this image, we have a meaningful secondary buy signal that should play out into the second quarter if we close today above 145.45. Until then, 145.45 is our ceiling, really, through February. And from here, we could perhaps fall all the way back into the low 120s again by the end of March. There's no clear indication of that, but that is just sort of the trend dynamics at play in terms of the different time horizons. So 1 to 2 months from now, by the end of March, we could fall back into the low 120s so long as we're unable to close above 145.45. Now, on the way up, there are a couple of charts I could show, but I'm just going to jump to this one. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. This is a combination rising 1/3 speed line and rising channel bottom, both coming off those early January lows. We slipped below them on Tuesday. We certainly didn't close below them. In fact, that outside day closing above the previous day's high, that in itself is a sign of strength coming into today. So I think there's a decent chance we'll get that buy signal today if we close above 145.45, but I don't like to be too presumptuous with this stuff. I like to let the market tell me. And so if you're, antsy to go long, even if it's for the next week or two into that 154.64 area, or if it's for the next 3 to 5 months up into the 173.31 area, it does, it's a good idea, I think, to wait for a settlement. Now, on an intraday basis, if we're trading in the 148 area, let's say, and there's a half an hour left in the day, you could pull the trigger before the close. You can do whatever you want, obviously. We're taking chances, obviously, during the middle of the day. And I'm looking at daily charts. These same formations, by the way, this is something I don't always remind you, and you're probably well aware of it anyway. This 145.45 daily channel top can be reconstructed on a 30-minute bar chart, a 5-minute bar chart, and you can get very fine, detailed intraday buy signals above these same formations. Now, the shorter term you go, a 5-minute bar chart is going to elicit a buy signal probably sooner than a 30-minute, and a 30-minute before a daily, so forth and so on. And so, if you're going to act on the 5-minute bar chart, you know that you're taking more risk than if you await settlement above, say, the daily chart at 145.45. So that's all I'm really going to say about that. But I'm going to go back to this chart here, and that is to say that after having tested that 145.45 channel top now a couple times over the last week, if we close today below 143.17. I think we have a sell signal into later February, the next 1 to 3 weeks, depending on volatility, then anticipating the 133.68 rising 2/3 speed line. So it is stair step on the way down. Will we test the low 120s again, that long-term support area? I say we could, holding below that 145. 145.45 area, but the first sign of momentum reversal, where we shift south on more than just a day or two basis, this would be 1 to 3 weeks, closing below 143.17. You may then scout out 122 out of the money puts that don't expire for at least 3 or 4 months. Once again, it won't take that long, probably take a couple of months, but you want to preserve delta. And if you're just a 1 to 3 week trader, a position trader, and we close below 143.17, you might look at a 135 out of the money put that doesn't expire for I'd go at least a couple of weeks out on that, probably more like a month out. Once again, it'll only take a couple of weeks to get down there. But you don't want to see your option expire worthless and the market trading right at strike as you come into expiration. I think that pretty much summarizes it. I mean, let me flesh this out just a little bit more, that if we push or open today above 145.45, we might actually see 150.16 by the closing bell. And closing above 145.45, 154.64 becomes a 1 to 2 week objective. And then that 173 area over the next 3 to 5 months. Inversely, if we break or open today below 143.17, we could test 138.42 intraday. I still have 140.45 as that long-term speed line. That may be it to the downside, but if we do close below 143.17, 1 to 3 week downside objective at 133.68. I think that pretty much rounds it out for Thursday's Daily Apple Report. Be back tomorrow with Fridays. You have a great evening.